Welcome to Regulatory Ramblings. Our guest today is Dr. Oriol, and he's an authority on fintech. And since last December, he has been the host of the Digital Tomorrow podcast. He'll be talking to us today on CBDCs, or central bank digital currencies. Just to give you a quick rundown of his background, Oriol is a fellow at the Singapore University of Social Sciences, in addition to being an honorary fellow here at the Asian Institute of International Financial Law at HKU. He also works as a board director and co-leader of the Financial Inclusion and CBDCs working groups at the Global Impact FinTech Forum, or GIFT, as well as being the chairman of the private Digital Euro working group at the Digital Euro Association, and a member of the board of advisors at the Blockchain for Europe group. He's a well-known international speaker and was named Asian FinTech Speaker of the Year last year by Faster Community, and he's participated in over 150 international conferences in the last 2 years about CBDCs, blockchain, and the use of blockchain in Islamic finance and banking, believe it or not. He's published articles in several international media outlets and has been cited by several more, such as Reuters, Forbes Middle East, South China Morning Post, here in Hong Kong, Outlook India, China Daily, The Asian Investor, Forecast News, and Cointelegraph. And he joins us today. Oriol, thank you so much for being with us. Glad we're finally able to make it happen.
Thank you very much, Ajay, for having me today.
Much obliged. Been looking forward to this for quite a while. To start off with, tell us a little bit about yourself. What brought you into this space? What got you interested? Everyone had their own epiphany, their own waking moment of, this is going to be the wave of the future. Blockchain, DLT, crypto, digital assets. This is something that's not going away. When did your realization come?
Well, I would say that same as many other things in my life, my epiphany basically came in Hong Kong. I graduated in law 10 years ago. So I initially started as a lawyer, a traditional lawyer. I worked in corporate finance, corporate law and advising companies on M&A as well. Then I transitioned towards finance, traditional finance. And when I was living and working in Hong Kong back in 2016 and 17, I realized that the future was everything that had to do with tech, fintech, legal tech. And I started to attend events and do some networking on the area of fintech, more specifically blockchain. And it was there, I would say, when I started to realized that the future was about, first of all, everything tech, but more specifically, I started to learn much more about blockchain, its applications, because before then, of course, I knew what blockchain was, I knew about cryptocurrencies, I knew about DeFi, but my knowledge was quite superficial, to put it some way. I knew a bit about it, but to be honest, I still relied very much on what some media said about cryptos being this, the blockchain being that. But it was then in Hong Kong when I started to try to dig much deeper. And I realized that, of course, traditional law, traditional finance will keep playing an important role in the future, of course, but right now it's much more than that. We see this idea of tech anywhere. We see legal tech, travel tech, and especially when it comes to finance, I think that the role that technologies can play, new technologies, especially blockchain, artificial intelligence, is huge. And it was in Hong Kong, thanks to Hong Kong's thriving fintech environment, when I realized that this would be the future.
Is Hong Kong's environment really thriving, though? When people compare it to places like Singapore and Dubai, which has got I don't mean to put down my own town, but by the same token, you've got to be honest in your reporting, and I don't know. People feel things may have gotten off to a good promise 2017, 2018, 2019, but things have since stalled, and of course things have happened locally, but. You still have that sense of promise about the local scene here, or what gives you optimism, if I may ask?
I do. I still keep my optimism nonetheless. I would say that the main thing hindering Hong Kong's development these last maybe 2 years has been the pandemic. and the restrictions in Hong Kong. No? But we are starting to see some light at the end of the tunnel. I mean, recently it was announced that no hotel quarantine would be required, and I guess those measures will keep easing soon. So I would say yes, Hong Kong is right now a bit in a disadvantage, compared to, let's say, Singapore or Dubai. But I would say it's mostly because people can freely enter and leave those places, Singapore, Dubai, whilst they cannot do so in Hong Kong. So of course, this is always going to be a problem. But the more Hong Kong keeps opening up this coming year, the more Hong Kong will catch up. And Hong Kong has some advantages that these other financial centers may not have. I mean, Hong Kong will always be the gateway to China. So I think that's a very important part. I mean, it's true that Singapore's fintech scene is thriving. That's undeniable. We are seeing like lots of blockchain companies being set up in there. And I guess this tendency will keep growing. It will keep increasing. And we've been seeing like many big events organized in there. So, of course, I mean, I won't deny that Singapore has a huge role to play as well. But, well, Hong Kong has this clear advantage, of being the gateway to China, and this will not change. I mean, I would say the only thing that needs to change maybe is how open up to the world Hong Kong is again. And I guess this is already changing. So I'm still optimistic despite the challenges.
Okay. Now, it's interesting. In your intro, I spoke about if I can draw the inference that you believe that blockchain technology can be applied to Islamic finance. This is something I do know something about, and at the core of Islamic banking and finance is an obsession, a preoccupation with sound money, and that ultimately the soundest money is gold. It's tangible, that which you can touch. Notions then of blockchain and cryptocurrency and digital assets, how do they play in an environment that where the soundest money is gold, as has been the case since ancient times?
Yes, well, actually, blockchain in Islamic finance is one of the topics that I covered that attract more interest because, well, I would say that not many people write about that or talk about that. I mean, I think we need to differentiate once again blockchain as a whole compared to cryptocurrencies. No, so when it comes to Islamic finance, I mean, first of all, um, Islamic finance, I mean, of course, we call it Islamic finance, but to some extent, we could also call it like ethical finance, no? Because the principles behind Islamic finance, even if they are religious based, at the end of the day, what they are just trying to establish is this system of ethics, no, in finance, to put it some way. So it's
You
true
may as
that
well call it
especially
Judeo-Christian. Yeah, you may as well call it Judeo-Christian finance because that's just how finance was done in the ancient world. People shared risks.
exactly, exactly. And at the end of the day, I feel like it's true that it may seem like kind of contradictory to talk about cryptocurrencies and Islamic finance, but first of all, I think we need to talk of blockchain as a whole. And blockchain as a technology can be used, and it's being used in certain banks and countries to improve, for example, processes, to make all the WAKIF processes so good, much more efficient, transparent. That's what blockchain does as a technology. It enables this transparency, this seamless way of working. And then when it comes to cryptocurrencies, to this specific application of blockchain that is cryptocurrencies, in Islamic finance, that there is much more tricky. I wrote some articles about that, trying to establish whether they are halal or haram, and it's complicated because not even among Islamic finance scholars there seems to be like a common ground. I think the idea is that given that Islamic finance tends to avoid, or one of its main goals is precisely to avoid speculation, I would say that well, I mean, this is like a broad statement, no? But I would summarize this by saying that most scholars agree that if you use cryptocurrencies for trading purposes, that is, for selling them later at a profit by speculating, then they shouldn't be permitted, no? In Islamic finance, they should be considered like haram. Whereas if you just hold them as a means of payment without trying to speculate, then in that case, they should be permitted. This is one of the most common theories about cryptocurrencies in Islamic finance, but as I said, there is no common ground. I mean, many scholars think that they should be banned per se because they are haram no matter what. So it's actually a very tricky topic, but I would say that the main idea I would get from this is that blockchain can play a role in Islamic banking and finance. Maybe not cryptocurrencies so much, but at least blockchain as a technology, yes.
No, it's a valid point because no the City of London has long, especially HSBC, has long done a roaring business when it comes to Islamic finance, as has Singapore, as has Malaysia, and each practices it a little differently in terms of how the allowance they're willing to make for investments in certain industries, aerospace, defense. How do you segregate the two? What's haram? What's halal? Hospitality. Serving alcohol, meat. It's these discussions can go on further. But to the extent that what you were saying, that it can make the processes more efficient and hopefully lower costs. That's important, because the critique about Islamic mortgages, Sharia compliant mortgages, is not enough expertise, not enough deep enough of a liquidity pool, oftentimes in the West, for those that want Sharia compliant products, and the costs are too high vis-a-vis conventional finance. But obviously, once things reach a certain critical mass, a certain size, then hopefully one would think there'd be economies of scale. But coming back to the central point of today's discussion, why do people need the new generation of digital finance, and why DeFi, why decentralized finance? We already have de facto digital money systems that work well. People want to know.
Well, I think that's a great question. I would say that I don't think that we need DeFi. No, I mean, I don't think there is maybe like an existential need, but I would say the more options, the better. I mean, I'm personally, I'm much more interested maybe like in the technology behind it, but I would say that the idea of decentralized finance is actually very interesting because, well, DeFi tries to solve several issues, no? I mean, namely, for example, intermediaries, no? I mean, we know that the traditional finance paradigm relies pretty heavily on middlemen, no? to regulate transactions, no? And DeFi tries to end with this idea of middlemen. And then also like availability. So DeFi offers many advantages to consumers, such as, for example, eliminating the fees that banks charge for using their services, allowing the users to hold their money in secure digital wallets instead of keeping them in a bank, transferring funds within seconds or even minutes, because we all know that transfers can be quite slow, even nowadays. So in general, reducing transaction times and increasing the access to financial services. And that last part is actually very interesting. This idea of making it easier for people to access financial services, because we all know that the lack of financial inclusion is actually a big issue in many countries. I mean, we are talking about an issue in India, Pakistan, even in China, there's a huge amount of unbanked people. So I would say that the more tech oriented we are, the easier it will be to include as many people as possible in our financial systems. I don't mean by that only DeFi will play this role. I mean, virtual banking, for example, CBDCs can also play this role. So if you ask me, like, do we need DeFi? I would say that, I mean, we existed well before DeFi, so maybe we don't need it to survive. But of course, it brings some extra values, many advantages that I think it's worth considering. But of course, I mean, and especially given the name of this podcast, I think that we need to keep always an eye on regulatory issues. Because one thing is what DeFi offers, and I think that DeFi, of course, offers many advantages, but the other thing is how it is regulated. And I know this part is tricky because if there is no proper regulation in place, those advantages can kind of blur or vanish, because you need to make sure, first of all, that in your country, let's say, I don't know, let's talk, for example, about cryptocurrencies. You need to make sure that you can actually use them, trade them, that there are no prohibitions that make it like virtually impossible or very expensive to use them. So I would say that, to sum up, I would say that DeFi is actually very interesting because of all those advantages that I just said, but at the same time, regulations are actually a big issue, because this topic is not regulated like in a uniform way, like everywhere, and therefore we need to keep an eye open.
Yeah, the issue of financial inclusion's long been an issue with the World Bank, IMF, the FSB, the Financial Stability Board. I don't know if there are any easy answers, but I think bankers are starting to understand that. For the longest time, I was at an event, AML event hosted by ACAM several years ago, and And this is at the end of the last decade. And the chap from Saudi Arabia said that quite openly, for the longest time, banks had gotten fat, lazy, and complacent. They were just used to people bringing them money, and people need banking services, not necessarily banks, hinting at, as we know in certain parts of the world, the Philippines and I believe parts of Africa, telecommunications providers are providing pseudo banking system. I mean, transfer of funds on phones, and that's opened up. It's lifted a lot of people out of poverty. It's made commerce and banking possible for them, and I think DeFi hints at that, doesn't it? That the entities that can not only disintermediate banks, but central banks as well, which is an issue for nation states to deal with, because obviously the sovereign wants to be the one to mint the coin of the realm, not lose control over that.
Regarding financial inclusion, I would say that it's of course a very tricky issue, no, because there are many reasons why one can be unbanked. And one is actually pretty obvious and sad. No, you can be unbanked basically because you have nothing to bank in. No, if you have no money, then there is no option for you to become banked. And then there is the second case, which is the one that you mentioned from the Philippines, certain parts in Africa, where what you lack is access to, let's say, a physical bank branch. It's very common, for example, in certain parts of Africa, to see people having like smartphones and laptops, but they may be living in remote towns where what they lack is actually simply a bank branch, for them to go, and that's all. So in those cases, which are not few actually, it's where not just DeFi, but also virtual banking, CBDCs can play a major role. I said Africa, it can be Philippines as well, Indonesia, India, Pakistan, Bangladesh, even China. There are like many possible cases, where we could apply these ideas. Of course, there is no magic wand for financial inclusion, but I would say that, thanks to technology, we have like many more ways to solve this, or at least to try to mitigate the effects, of the lack of financial inclusion. And you mentioned as well this idea of central banks losing maybe power, because of DeFi. Well, I know this is a concern, but I always defend that DeFi is actually compatible with CBDCs and the current system that we have. I think that this future of money, or a future of the financial system, or however you want to call it, actually allows for countries, if they want, to allow all these new things to coexist. They can keep, of course, cash, which is like the most traditional system. They can keep the electronic transactions that they were already in place in those countries, but at the same time, I think they can, for example, create their own CBDC whilst regulating cryptocurrencies. I don't think that one excludes the other. Of course, the approach of every country will differ. It will be different. Some countries are more crypto-friendly, others decide to banish them. But in theory, it's possible to see coexistence.
Certainly the hostility, it's interesting to note, the hostility that existed a decade or more ago by national governments, by regulators, has to a great extent subsided, that they realize that this is something they have to deal with. They have to regulate it, of course. You can't be part of the financial system and play by your own rules. As many, Bitcoin, the libertarian fringe within the Bitcoin movement seemed to be advocating in the early days. But in a sense, once they regulate you, one could say you've arrived. You're respectable now. You're part of society. You're no longer on the outside looking in. You're no longer on the fringe. So certainly that would be a positive step. But let me ask you this: do you see the current state of, private peer-to-peer cryptocurrencies like Bitcoin being a Trojan horse to get people to ultimately adopt CBDCs, which many nation states, like China and even the U.S., seem to be interested in creating their own digital currencies? Because ultimately it's about control. That I don't think they object to the concept. I don't think they object to the technology. It's about who controls it, though.
Well, I think I personally don't see cryptocurrencies as a Trojan horse to get people used to CBDCs because, I mean, to a large extent, they are like very different ideas. I know that sometimes some people refer to CBDCs as cryptocurrencies, but to be honest, CBDCs are not cryptocurrencies, no, like to begin with. So I know there are some similarities, of course, from the tech perspective, especially. But the thing is that to some extent, CBDCs and cryptos couldn't be more different. I mean, CBDCs, for example, are completely centralized, no? Whereas cryptocurrencies are completely decentralized. And aside from that, the use that we will make of each of them is actually very different as well. I mean, we'll use CBDCs to make pretty much the same things that we do with our money nowadays. I mean, especially retail CBDCs. No, I mean, we'll use them to get our salary paid in CBDC, to make transfer using CBDCs, to make payments. No, but we are not going to be using them for trading purposes, generally speaking. Whereas when it comes to cryptocurrencies, yes, of course, you can use them to make payments. In certain jurisdictions, in certain companies, but generally speaking, they are more like an investment asset class, a very, well, I would say, volatile one that can either like go up or go down like enormously in a short period of time. Therefore, it's very, well, interesting and risky at the same time. So as you can see, the approach, to CBDCs and cryptos actually very different. So I don't think that one is a Trojan horse to the other, to the point that even though it was said before, like a couple of years ago, that some central banks or many were designing their CBDCs to some extent fight the rise of cryptocurrencies. Well, I mean, maybe this was their initial idea, but as I said, there are like so many differences between CBDCs and cryptos that I feel like the goal in the end will be different. I think that most central banks right now are designing CBDCs to make transactions, payments much more efficient, much more seamless, to facilitate cross-border payments as well, not so much to destroy or to fight the crypto world. Because, I mean, to be honest, leaving aside stable coins, which overlap a bit with CBDCs, when it comes to cryptocurrencies, they are like so different. I mean, I don't think you can like really compare, let's say, the digital yuan or digital euro in the future with, let's say, Bitcoin. I mean, what each one of them offers, what you can do with each one of them is like so different that I don't think that one is a Trojan horse to the other. I mean, of course, the more used a country is to making electronic payments, the easier it will be for that country to adopt a CBDC. But for example, let's look at China. China is adopting successfully the digital yuan, but they are not doing so because they are used to trading cryptocurrencies. I mean, actually, as you know, cryptocurrencies are virtually banned in China. I would say that it's easier in China to deploy a CBDC, mostly because people are very used to making electronic payments via Alipay, WeChat Pay, so it's easier in there. So I would say the best way for people to get used or not used to a CBDC is not so much whether they trade cryptos before or anything like that, but whether they are used to making electronic payments or not. So I would say that CBDCs maybe should be more related to electronic payments like mechanisms like WeChat, Pay or Alipay in that sense than cryptocurrencies, no? Because the difference between the digital euro and Bitcoin is huge. I mean, it's actually very huge. And then to make it even more complicated, as you know, there are countries like El Salvador last year in Central America, which tried, well, actually they did it, to establish Bitcoin as their legal tender, but that's even like much more complicated, having a cryptocurrency as legal tender.
But again, going to what you were saying about the difference between CBDCs and peer-to-peer crypto, a digital coin issued by a nation state in a particular jurisdiction will necessarily be legal tender within that jurisdiction. I mean, it seems bizarre that they would pass, they would allow the creation of such a cryptocurrency without, it being legal tender or, one form of, acceptable payment. But whereas, with things such as Bitcoin, the position of the HKMA has long been for over a decade now, I think. These are digital commodities, and you trade them at your own peril. They don't regard them as a currency. So let's talk about the benefits of blockchain. Many say there are things like, immutability, it enables DeFi, but is this truly necessary?
Um, well, I mean, blockchain is necessary for DeFi, for cryptocurrencies, but not so much for CBDCs. I would say that generally speaking, blockchain as a technology is actually becoming quite necessary in general, not just for DeFi. Because, well, I mean, we were discussing this before when talking about Islamic finance, but we can discuss this about many other areas. I mean, we all know that blockchain was invented to underpin the operations of cryptocurrencies. We all know that. So, of course, I mean, blockchain and cryptocurrencies, like they were born like together, to put it this way. But at the same time, I think that blockchain right now is much more than just cryptocurrencies. And for example, I mean, I think that probably the world's most clear example is China. We all know that China has been very tough on cryptocurrencies to the point that they are virtually banned. But at the same time, China is very blockchain friendly. So China may not be may not be crypto friendly, but China is very blockchain friendly. I mean, we all know, for example, about China's BSN, Blockchain Service Network, and many other interesting projects that they have, which and to the point that even President Xi Jinping said in 2018, I think it was, that companies in China should seize the opportunities offered by blockchain. So the thing is, blockchain, even though it was created to underpin cryptocurrencies, is much more than just cryptos. And it can be applied to many industries. It can be applied to the banking industry in general, aside from DeFi. It can be applied in trade finance. It can be applied in video games, in healthcare, and in IoT. For example, when it comes to trade finance, Hong Kong is working now on this E-Trade Connect platform, which is actually very interesting because the use of blockchain in trade finance will help make those paper-based processes much more efficient, much more modern, and much more seamless. So I think that blockchain as a technology is necessary. And then when it comes to DeFi, it's of course necessary. I mean, because at the end of the day, that's why blockchain was invented. No, I mean, blockchain increases trust, security, transparency, and traceability of data across a business network. I would say, though, that one mistake that certain companies or people make is that even though blockchain is, of course, interesting because of all the reasons I just said, I mean, blockchain doesn't solve all the problems in the world. And I say that because I've seen that quite often, especially in those blockchain conferences that I spoke in. Well, certain people who seem to be willing just to use blockchain just for the sake of using it, because I guess it's trendy to say that your company uses blockchain. But the thing is, there needs to be a use case in your company, for blockchain. I mean, blockchain doesn't solve everything. So perhaps there is no use case for your company to be using blockchain because it will not make any process faster, because maybe you don't really need that. So my point is, yes, it is necessary, but it depends. I mean, I think there is no doubt that blockchain is necessary for cryptocurrencies, but then when it comes to CBDCs, it's different because, as I said before, CBDCs are actually quite different from cryptocurrencies. So if you ask me, will CBDCs use blockchain? The answer is it depends. Sometimes yes, sometimes no. I think, and based on my conversations with central bankers, there is a great use case for blockchain in wholesale CBDCs, those aimed for facilitating interbanking operations, such as, for example, this project in which the Hong Kong Monetary Authority is working, MCBDC Bridge, alongside the People's Bank of China, the Central Bank of the United Arab Emirates, and the Bank of Thailand. In this kind of wholesale CBDC projects, blockchain can actually play a role in there. When it comes to retail CBDCs, such as, for example, the digital yuan, digital euro in Europe in the future, I don't think that blockchain can play such an important role in there. So I would say blockchain for DeFi cryptocurrencies, yes. For CBDCs, partially, not necessarily.
But, I think a recurring theme seems to be governments, again, don't object to the infrastructure that blockchain can create for them to use. They may have certain misgivings about private crypto, but in terms of using like you said, China's clamping down on crypto, but China is very blockchain friendly. So again, they're seeing alternative uses for the underlying technology to improve the financial sector. Which makes me think about distributed ledger technology. for the longest time, the view was, okay, DLTs can increase transparency in the banking sector if all the banks plug in and participate in the same DLT. Then we can see, a regulator can see where risk is emerging in the system because everyone's got access to the same ledger. And then you can go after certain institutions and say, okay, maybe you might want to unwind some of those trades. But increasingly, what I and other journalists who speak to the institutions are hearing is they don't want that. That the attitude is still very competitive. There's no mood in that for collaboration to that degree, and that banks want their own closed circuit distributed ledger, and that if there are any benefits to cost savings, they're going to go straight to the bank. They're going to go straight to the executives. They're going to go straight to the shareholders. The average bank customer isn't going to see too many of those benefits. I mean, am I overstating the case? I mean, are the journalists that say such things being too cynical, or is that an accurate assessment that banks want their own closed circuit DLT technology? But then, if that's the case, that kind of defeats the purpose, then, doesn't it? Because there's no social value in that. It doesn't lessen systemic risk. It doesn't increase transparency. It doesn't increase good governance or lessen the chance of malfeasance in future.
Well, I think it's actually a very complicated topic because the thing is, I think it's going to depend pretty much on each and every bank. I mean, we all know that traditional banks, I mean, I don't want to generalize, some are very tech-oriented, but generally speaking, some of them, they don't love change that much. Some do, but some others not so much. So, of course, I mean, when you start talking about DLT and all that stuff, well, I mean, it may take years, for certain banks to realize the potential of that. So, I mean, well, I don't think you're cynical. I think there is a truth behind the words that you say. But at the same time, I think we need to look at this like maybe from an optimistic angle, in the sense that a few years ago, and I experienced that myself, just bringing up the word blockchain or crypto when talking to a banker, like, force them to stand up and leave the room. I mean, I experienced that myself. I was talking to a banker a few years ago, and just by mentioning like fintech, blockchain, cryptos, like you could see them like really scared. And now there's been a change. I mean, many banks, are tapping into blockchain, even into cryptocurrencies. I mean, I don't want to cite like examples or anything, but we know that certain banks in Asia created even like things similar to crypto exchanges, and we saw that in Singapore, and we are seeing that in other places as well. So, and we are seeing many big investment banks investing in crypto portfolios as well. So I would say that, of course, we're not in a perfect situation yet, in the sense that, some banks, of course, are still reluctant towards the use of certain technologies. And when it comes, what you said now about DLTs is actually accurate, but at the same time, we need to look at where we were, let's say, in 2018 maybe, and where we are now. And I think there's been a huge change. These areas are becoming much more institutionalized. And this is so not just because the use of blockchain, cryptocurrencies is much more widespread, which is true, but also because governments are trying to regulate this area. So I guess the more regulated it will be, the easier it will be for incumbents to try to tap into these areas, even though, of course, these issues that you mentioned will remain, but it's part of this like eternal friction between banks versus fintechs. I mean, this thing that used to be competition before, but now it's becoming much more of a cooperation. I mean, banks can bring a value that fintechs cannot bring, but at the same time, fintechs can also bring a value that banks cannot bring. I mean, certain banks have been like there for over 150 years, so they have this reputation, this client base. But at the same time, when it comes to technology, certain fintechs are much more advanced than them. So I think it's all about finding the perfect combination. And whilst these issues that you mentioned remain, I think that slowly they will start to maybe vanish, at least in certain jurisdictions. Of course, it's very difficult to make like any general statement. But I think the case of China, as I said before, it's very interesting, and I know I will keep repeating this one, but because it allows you to see that that you don't need to be crypto friendly to love blockchain. That you will be able to create all those huge blockchain networks and create many uses for blockchain, for enterprise blockchain, without necessarily needing to to be crypto friendly. So I think this is a clear example that this area is actually much more rich that one could expect when starting to read about this.
Fair enough. But then you look at problems in the crypto space. I'm thinking mainly of 3AC, Coinbase. There have been other incidents. These highlight the shortcomings of DeFi. So how would you propose regulating DeFi and crypto in general, given the international and technical challenges?
Well, I think maybe that the first mistake here has been some kind of misinformation in the sense that we always talk about cryptocurrencies, and certain people actually got to believe that they are currencies in the same way that I don't know, or Hong Kong dollar or euro. But we're actually talking about crypto assets. No, we're talking about a risky investment asset class, and as such, of course, like prices can skyrocket, but they can also go down very quickly. So there is a risk in that. And well, aside from that, I would say that even though the percentage of illicit transactions using cryptocurrencies has reduced enormously these last few years, mostly because many more people use cryptocurrencies for not illicit purposes, some issues still remain. We all still see that, especially those who are involved in this world. It's very common to hear about failed projects or even about shady projects. I know that this happened before in traditional finance as well, but being DeFi an area where money can be made so easily by certain people, where things go so fast, I would say that the amount of to put it to some extent, shadiness has been bigger in this area, especially because there are many regulatory loopholes, or perhaps there is even no regulation at all in certain places. So that's what makes this area much more prone to certain malfeasance. And we're now in the midst of this crypto winter, that's undeniable. And we saw, for example, projects like Terra and Luna, collapsing in May, June. We also saw that the price of Bitcoin and most cryptocurrencies going down enormously. We saw many people losing their savings. Yes, of course, that's sad, but I think that the best way, or the only ways for me to try to prevent these issues from happening in the future again are basically two. First one is about education. People need to know more about tokenomics. Certain people invest in these areas without actually knowing what they're investing in. This is not like a normal currency. It's not fiat currency. No, tokenomics actually, it's a different part of economics, to put it some way. It has certain different rules. Of course, it's connected to traditional economics, but in some ways not so much, because certain rules are different and the whole scenario is different. So I would say this education, first of all, is basic, and this is why podcasts like yours and these courses like the one that HQ offers in FinTech as well are very necessary nowadays. And then secondly, of course, there is the regulatory approach. Investors need to be protected. They need to know that not just that there is a safety net, but first of all, investors and companies as well. They need to know what they can do and what they cannot do. I would say that I know that some people are kind of crypto libertarians, to put it this way. I know many people who are like that. I personally myself, perhaps it is because I initially studied law and then finance, I advocate for a much clear regulation of this area. I don't think that this area should be unregulated, as some people claim. And I know it because, friends of mine, people in some WhatsApp groups that I am in, they claim that the idea behind DeFi is precisely, or it was born because people wanted to escape this, world where central banks and governments keep controlling you. So they have this kind of utopia libertarian mind. I respect that. But the thing is, I don't think that's feasible in the long term. Because, as you said before, not only no country will allow any cryptocurrency to compete and destroy their fiat tender, but their fiat currencies, but also because the whole idea also makes it much more prone to schemes and frauds. So this is why I think that more regulation is required. I'm not saying by that this regulation needs to denaturalize what cryptocurrencies are. Cryptocurrencies can remain crypto even though they are regulated. Actually, I think it's kind of the opposite. The more regulated they are, as long as the regulations are safe and wise, I think that what the regulations will make actually is to make this industry thrive. The reason why certain banks or traditional banks, investment banks didn't want to tap into these areas is, to a large extent, because of the lack of regulation, because of of a lack of clarity in this regulation. No? I mean, I wouldn't say that it's because there is like any kind of reputational issue. I know that sometimes the reputation of cryptocurrencies may not be the best, but the thing is, to me, the thing that hinders the institutionalization of cryptocurrencies to a large extent is precisely the lack of a proper regulation in certain jurisdictions. I know this is changing. No, I mean, I'm not generalizing. I know that Hong Kong has its laws, will pass its laws as well. Europe is working on MiCA. So, I mean, there are many regulations like either in place or about to become in place. But still, I mean, I foresee personally a much more institutionalized environment. And I think that this is actually where we should be going. I mean, I know there is a debate as well on whether national rules can address the risks created by these assets, because I mean it's kind of easier to regulate your own CBDC, for example. I mean, you as a central bank of whatever country launch your own CBDC, so you will be able to like completely control it. Whereas when it comes to cryptocurrencies, it's much more difficult because a Bitcoin is a Bitcoin like anywhere in Australia, in Hong Kong, in Spain, in Japan. So the thing is, how to regulate that? Well, I mean, of course, it's possible, but it's much more complicated precisely due to the decentralized nature of DeFi. But more complicated doesn't mean impossible. And to me, the more regulated this area is, as long as these regulations are wise enough, the more investors will be protected, and even the more entrepreneurs and companies in this area will know what to do, how to do it, and what not to do. And I think that this DeFi world that we saw for the last few years, where anyone without a license could operate and start like taking giving loans, and doing all these financial transactions, this will eventually end. I mean, we cannot like see these huge companies, like moving so much money around from investors, from retail investors in many cases, without like a proper regulation behind. I think that this is going to be the future, and to some extent I hope it is, because we need clarity. I was recently, for example, working on a white paper at the Digital Euro Association. It was called Stable Coins, an Introduction and Recommendations for the European Union from the Private Digital Euro Working Group. And we precisely tried to do that. We focus on the private digital euro idea, so stable coins basically, and we try to analyze how they are regulated in Europe and how they should be regulated, in order for them to coexist with CBDCs and avoid any future issues. Because at the end of the day, if you look at most of these frauds or issues that we've been seeing in the crypto industry these last few years, most of them could be to some extent avoidable, with the right like licenses, regulations, and requirements.
Something you alluded to then is, do you really need blockchain for CBDCs? And if not, why use it?
Yes, I mean, we discussed this a bit before when talking about blockchain in general. When it comes to CBDCs, we do not need blockchain, but blockchain can be used in that area. Based on my research and talking to central bankers, I would say that there is a better use case for blockchain in wholesale CBDCs, that is, those designed for interbanking operations, such as the well-known in Hong Kong MCBDC Bridge project, or there was this project in Saudi Arabia, United Arab Emirates, called the Project Aber, in which precisely the use of DLT was analyzed, and it was concluded that it would be beneficial to use DLT in that case, because we are talking about wholesale CBDCs, which, because of their nature, makes it much more recommendable, for the use of blockchain. Then when it comes to retail CBDCs, well, I don't see such a good use case compared to wholesale ones, but I mean, who knows? I mean, I guess it could be used in that area as well. So I would say that unlike cryptocurrencies, we don't need to use blockchain in CBDCs, but in certain cases, it might be useful to do so. And I think that's one more difference with cryptocurrencies as well. I was saying before that CBDCs are centralized. They are not like for trading compared to cryptocurrencies. One more difference is precisely the technology behind. CBDCs will, some of them, use blockchain, but just some of them, and just to a certain extent. So I think that's another clear difference. But again, the thing about CBDCs is that each central bank will design their CBDC in a different way depending on their interests and policies, which means that the future digital euro, for example, will not need to look at all like the future digital yuan, well, digital yuan is already a reality, like digital yuan right now, or the future digital, I don't know, US dollar, for example. No, each CBDC will be different because each central bank will put their focus on like a different area. I mean, CBDCs can be used. I didn't say this before, but they can be used for cross-border payments, for as a tool to improve financial inclusion, to fight financial crime more efficiently, for monetary policy purposes, and so forth and so on. So the thing is, each central bank will design their CBDC differently depending on which area they want to put their focus on, which means that the technology behind them may be different as well. No? But generally speaking, this would be like the summary about blockchain and CBDCs.
Well, going to your point about each jurisdiction's kind of somewhat different focus. Yeah, I mean that's a facet of the broader point that the markets are in different levels of development in this region. So harmonization becomes difficult. The other point about CBDCs is people point to it as a further intrusion of government, spying and control. And Hong Kong recently gave out stimulus money to revive the economy during the pandemic. And they did so electronically. Had they used a CBDC, then in theory, it could have directed economic activity by requiring people to buy certain goods, not others, and so placed expiry dates on the CBDCs. So what do you think about that?
Well, I would say that privacy is one of the main concerns when it comes to CBDCs. We had this survey in Europe, the European Central Bank, before deciding to work on digital euro. They launched a public consultation. It was launched in October 2020, 2 years ago, and the results were published in April last year. And actually, the thing that most citizens and companies in Europe, or at least most of the citizens and companies which responded to that survey, were concerned, like number one was privacy, or the lack of privacy that could come from a CBDC. I understand that this might be an issue to some people in the sense that if I said before that CBDCs can be used to fight financial crime more efficiently, it means that in theory it should allow people to track your transactions. It should allow, sorry, not people, but central banks and governments to track your transactions much more intensely. This could be true, but at the same time, I don't think this should be such a big concern because, first of all, and there is a very interesting note, analytical note by the Bank of Canada covering this, but the thing is, the right technologies exist nowadays to make sure that CBDCs respect privacy. I mean, the use of cryptographic techniques to make this happen, to make this privacy happen, already exists. So it's going to be up to each central bank to decide whether they want to use this technology or not. But generally speaking, I mean, the technology exists. It's not that there is no option for CBDCs to be private enough. Then it's going to be up to each central bank. I don't think that central banks will use CBDCs to spy on their citizens. Because, to be honest, they can already do that in other ways. Many people tell me, especially when I give any seminar on CBDCs, they tell me like, governments are going to spy on us now that we have CBDCs, this, that, blah, blah. But the thing is,
that's we hear that all the time.
Yes, exactly. But the thing is, for example, look at whenever you get like any payment to your account, even if it's like using the electronic means of payment that we use, like let's say that you receive like a large transfer and then you make like a large payment to anyone. Quite likely your bank is going to communicate this transaction, in most jurisdictions at least, to your inland revenue department, to your tax authority, even though you're not using CBDC. So my point is, and there is a very interesting table by the Bank of Canada where you can like analyze how private each means of payment is, and the only like almost completely private means of payment is cash. It's like they rank from 0 to 3 each means of payment, and cash is the only one that pretty much scores like 3 in most of all the criteria. Then when it comes to their means of payment, not even cryptocurrencies are completely private. So the thing is, of course, CBDCs can bring this concern to people, it's true. And yes, I know that in theory, this could be like a tool for central banks to control more this and that. But the thing is that, I don't think that we should be living in this kind of bubble by thinking that, CBDCs will allow governments to spy on us, whilst now everything we do is private. The thing is, if a government wants to control, why you got this large bank transfer in your account, and why you pay this, why you pay that, they can do that anyway, because there are mechanisms for them to do so. So I don't think that CBDCs will make such a big difference in that sense. It's true, a tool to fight financial crime more efficiently, which means that I understand why this concern exists, but at the same time, generally speaking, the right technology is there to prevent to prevent CBDCs from being any kind of spying tool. So I would say this shouldn't be such a big concern, and I know it's a big concern to many people and in many countries, but I don't think it should be such a concern. I don't think that CBDCs are like the first tool that will allow governments to control things that they couldn't control before. If anything, maybe it would make this control easier, but that's all. This control could exist before. And also, CBDCs have the potential to use technologies to prevent that from happening, that loss of privacy. And then knowing that this is such a concern for citizens, I doubt that many central banks will use them as any kind of spying tool.
Okay. It's also been mentioned that this could be a use for foreign policy, that in an age of uncertainty, sanctions being casually used back and forth by different parties, some say recklessly so, that certain governments could use CBDCs for foreign policy. So with China, the Belt and Road Initiative, for example, saying to a developing African nation, we'll give you the electronic yuan with software-enforced restrictions. What are your thoughts on that?
Well, actually, to me, that's one of the key points about CBDCs. I actually published recently a paper at the Blockchain Research Institute on the digital yuan for cross-border payments, and I focus mostly on what you said now, the Belt and Road Initiative. Well, I said before that CBDCs offer many advantages, or they can offer many advantages. They can make payments more efficient, transparent, faster. There are many. They can promote financial inclusion, but one key area to me is that of using CBDCs for cross-border payments, for cross-border transactions, and therefore allowing countries to use them maybe from a geopolitical angle. And that's undeniable. This is one of the main advantages that CBDCs can offer to certain countries. And I would say that when it comes to the case of China, I know that no one said that officially, but to me, and I always defended that theory on my papers and conferences, this geopolitical angle, this idea of allowing China to internationalize the yuan through digital yuan, is basically one of the main, if not the main, key driver behind China's attempt and finally success in launching the digital yuan. We all know that the yuan's internationalization has been hindered by the lack of full convertibility of the yuan. This is why the greenback, the US dollar, accounts for most of the transactions in international trade, whereas the yuan accounts for very few. And I'm not going to say that this will change overnight. I'm not going to say that the digital yuan will make the yuan a stronger currency than the dollar in international trade or anything like that. I don't know if that will ever happen, and if so, when that will happen. I cannot know that, and I don't think this is going to be anytime soon. But it's true that at least it will play a role in that area, the digital yuan, because it's, not just in the Belt and Road Initiative. It will allow China to internationalize the yuan, to make it much widely used in international trade. For example, we saw that China's central bank, the People's Bank of China, signed in February 2021, 1 year and a half ago, a joint venture with SWIFT, whose goal was precisely to internationalize the yuan. Then we also saw China 2 years ago signing the RCEP Free Trade Agreement, the Regional Comprehensive Economic Partnership, which is a huge trade agreement that will create this massive free trade area, which encompasses 30% of the world's population and GDP, mostly in APAC, in East Asia and Pacific. This will be also a platform, a great platform for China to try to internationalize the yuan for transactions within this RCEP Free Trade Agreement. We also saw, for example, China working on projects like the BSN, Blockchain Service Network, which will create as well an interesting platform. And of course, as you said before, the Belt and Road Initiative, the BRI, will be as well a great platform, for China to try to internationalize the yuan, especially with countries which which are already like trading like enormously with China, so they will be for certain much less reluctant than others to use the digital yuan to settle transactions. So yes, I think that this cross-border payments, international payments angle is key to digital yuan. It may not be key to all CBDCs because, as I said before, how each CBDC is designed depends on each central bank, which means that, I don't know, let's say, for example, perhaps in Europe, the Eurozone is not that interested in this cross-border aspect. I mean, I don't know, I'm just like speculating, no? I mean, it's just like an example. But in China, there's been this clear interest. So even though it's been launched so far domestically, I mean, we all know that that in early January, the People's Bank of China launches the digital yuan wallet for Android and iOS. We all know that it's being used in a few cities and it's being used by 260 million people. So it's not even like massively used within China yet. I mean, the amount of people using it is growing and growing by the day, but still, it's not massive within China yet. So, of course, thinking about its international use is like phase 2, and I don't know when we will get there. I don't know if it's going to be like this year, next year, but still, I think this international angle, of course, will play a major role. And well, to what extent this will like reshape geopolitics, international transactions, it's way too early to know. But I think that that this is to some extent what encouraged the Federal Reserve in the US to work on their digital US dollar as well. I mean, we all know that under Trump's administration, the idea of a CBDC in the US was kind of disregarded. They thought it brought no advantage. But then when they saw China being so fast with the digital yuan, they started to work on this idea of a digital US dollar as well, because I think that, well, China has an edge. I mean, they started much before others, so yes, I think this geopolitics angle is undeniable.
I certainly think there is an element of keeping up with an emerging Cold War, not wanting to be outdone by the Chinese on the part of the Americans. Certainly on the part of the Chinese, one doesn't get the sense that they necessarily want an internationalized yuan, that maybe in limited scope and testing places like Tianjin and Hong Kong and a few other places, but one doesn't get the feeling they're ready to take the helm of the international financial system and do full-blown internationalization of the yuan, because when you do that, you're at the mercy of the global currency markets, and Hong Kong and the UK found that out quite the hard way in 1997 with the Asian currency crisis. Speaking of the UK, one question is, the UK recently launched a consultation on digital assets. Do you have any comments or thoughts on the matter?
Well, they are very active lately on this area. I know that the UK Parliament is seeking advice from industry players and policymakers on regulating cryptocurrencies and digital asset sector. And I know as well that the Law Commission published a consultation paper in the UK containing provisional law reform proposals to ensure that the law recognizes and protects digital assets in our current digitized world. No, actually, it was the UK government that asked the Law Commission to make those recommendations, to reform and make sure that the law is capable of accommodating crypto tokens and other digital assets. Well, I think it's a very interesting project, of course, because the UK is one of the most important economies in the world, a G20 country, and I think this underlines what we said before. First of all, that there is a problem nowadays. This problem is the fact that digital assets are becoming more and more important. It's not just that thing that certain people invested in, just a very few people. It's much more than that. I mean, its use is becoming like much more widespread. I mean, many people are starting to use that. Even many traditional banks, incumbents, are starting to tap into this sector. So for a country like the UK, having such a financial center as London, I think that, passing these reforms and regulating this area more efficiently is actually becoming basic. And this is a movement that we don't just see in the UK. I mean, The European Union, for example, is working right now on MiCA, these new regulations as well that will play a huge role too. So I think it's important, of course, to see the UK moving in that direction. But at the same time, we cannot forget that it's a difficult topic. I mean, I don't think that these areas can be regulated overnight because I mean they affect many different areas. You need to make sure that you are protecting retail investors, that you are protecting any investor whatsoever. You need to make sure as well that a country's monetary policy, financial stability is not affected by that, by cryptocurrencies, and you need to make sure to establish boundaries and in general to establish some level playing ground rules to make sure that cryptos may keep existing, but keeping in mind that there are many more things to protect. And I know it's kind of difficult because I'm kind of in between. I mean, that I work in this blockchain CBDC area, but at the same time, I'm always saying that a balance needs to be met. I'm saying that because, I mean, I don't like either of the two positions in the sense that I know that some people hate blockchain, DeFi, and cryptos just for the sake of hating them, but I identify either with those people who add ideas of utopia, libertarianism in this, forgetting that, like it or not, we're living in a world of governments, and we need a certain order and structure. So we cannot bypass that. We cannot bypass governments and central banks in our structure and our laws just to accommodate the idea of a new investment asset class that can bring freedom and I don't know what else. You need to find this balance, and because finding this balance will actually be the best for the industry. The only way for the industry to leave this crypto winter and thrive again is by becoming much more widespread, institutional, and regulated. I think that, and I know, this will draw criticism from certain people, but I think that's the best way for me to move forward. Therefore, proposals like these from the UK are actually not just interesting, but I would say necessary.
It's interesting that you say that a lot of people are not sold on crypto. A lot of people are not sanguine about it because they say you're dealing with something that fundamentally requires electricity and the internet to use. The internet is not out there in the ether. It's not its own realm. It's not its own jurisdiction. To access the internet, you need servers. Servers exist in physical, tangible places within jurisdictions. And nation states can seize those servers and shut them down if they so choose. So because of that, the view is CBDCs, cryptocurrencies, digital assets, all depend on IT and communications infrastructure. Does that mean, therefore, that CBDCs are not practically viable in places with poor infrastructure or poorly educated populations?
Well, when it comes to CBDCs, I would say they are viable. They are viable depending on how they are designed. It's possible to use a CBDC offline if they are designed in that sense. For example, China's digital yuan allows for offline payments, and many other CBDCs will allow for that as well. So I think that's a clear advantage. This idea, this capacity of using CBDCs for making offline transactions. And this is why I say always that CBDCs have a huge potential to be used in, as I said before, in certain remote areas or towns of Africa, China, India, Pakistan, Bangladesh, Central America.
Provided the infrastructure exists, right? Because, if you're in a war zone and you're in Somalia and you're trying to get out of the country, your best friend or the however many greenbacks you've got in your pocket, or euros or gold you've got in your pocket and your bags, however much you can carry, that is your currency. That is your exit strategy. That is your path to safety. That is your survival.
Exactly. No. I fully agree. If you are in one of those cases that you said, trying to flee a war zone, you mentioned Somalia. Anywhere. No. Afghanistan, any other country which experience any kind of trouble whatsoever. Of course, what you need to rely on is the cash, the greenback that you're going to be carrying with you. I don't think that no one will be then thinking of, oh, let's check whether my central bank launches CBDC or not, and how to use it, whether I can use it offline, whether I can access my wallet. I mean, you need to go for the fast and safest way. So yes, of course, in that sense, you're completely right. In most like normal cases, I would say that generally speaking, even the poorest countries do have an infrastructure. No, I mean, if you go to certain countries in Africa, as we said before, no, I mean, people use cell phones, people use laptops, even if they are poor. It's kind of easy to see them use that in certain countries. What they lack sometimes is other things, this physical access to a bank branch, etc. In those cases, CBDCs can play a huge role. Of course, some people will say cryptocurrencies can play that role as well. Virtual banking, yes. I mean, CBDCs is not the only tool in that sense, but I think what makes them safer than cryptocurrencies, or less safe, depending on the context, is the fact that it's launched by a central bank, which means that its value will not fluctuate that much. But at the same time, in case, for example, of sanctions, I mean, we've all been reading these last few months about sanctions against certain countries for certain reasons. So, of course, I mean, in that case, a cryptocurrency will help you perhaps bypass these sanctions more efficiently, but this is a different scenario, no? I mean, generally speaking, yes, of course, I mean, you need at least a minimal IT infrastructure, but this is why I would say that a country which lacks this minimal infrastructure will not certainly even think of working on a CBDC and launching a CBDC, because it will not be possible for them. And even if the CBDC is launched, even after launch, there might be additional problems. For example, Nigeria launched their e-Naira exactly 1 year ago. And I must say that from a technical and IT perspective, their starting was a bit bumpy. I mean, many people from Nigeria told me that they hadn't been able to use much their e-Naira, the CBDC, because the first month were actually a bit messy. It doesn't mean that at the end it will not be useful, but I mean, of course, even when you do have infrastructure, there may be additional problems. So I mean, let alone if you don't have an infrastructure whatsoever. So yes, I mean, I'm not saying that it will be like a magic bullet to overcome the lack of financial inclusion worldwide. CBDCs, I'm not saying that, but it can be an effective tool, especially in Southeast Asia, for example, as well. I mean, Philippines, Indonesia, places in Africa. I mean, anywhere where people can have access to technology, but what they lack is maybe the physical access to a branch. In there, it makes a good case.
Okay. Shifting gears, but broadly speaking, I'd say the same technology at play. Hong Kong's considering an electronic Hong Kong identity card. Any thoughts on this?
Well, yes, I mean, I know that Hong Kong started to talk about the electronic Hong Kong dollar back in June last year, I think, when the FinTech 2025 strategy was unveiled by the Hong Kong Monetary Authority. I know as well that a technical white paper was released in October last year. And, well, I mean, it makes sense to see Hong Kong working on that, because the Hong Kong Monetary Authority is actually one of the central banks. I mean, as you know, it's Hong Kong's de facto central bank, so we could call it central bank. One of the world central banks, which is actually more expert on CBDCs, because Hong Kong is currently working on more than one CBDC project. I mean, there are many central banks which are not even working on one CBDC project. So Hong Kong is currently working on 3. I mean, before the HKD, there was, of course, the digital yuan, because digital yuan, even though it is designed by the People's Bank of China, it was tested in Hong Kong as well for cross-border payments, international transactions. So the HKMA was involved in digital yuan tests. The HKMA as well has been involved for several years in the MCBDC Bridge project, which, as you know, it was known before as Intanon Lion Rock, because this project initially involved only the HKMA and the Bank of Thailand. And then the People's Bank of China and Central Bank of the United Arab Emirates were included. So the EHKAD would be like the third CBDC project in which the HKMA is currently working. My point is that the HKMA seems to be well aware of how to work with the CBDCs. Now, there is a clear experience now in Hong Kong in that area, so this is not something new. I would say that an EHKD would allow Hong Kong, I guess, payments in Hong Kong to be pretty much what we said before in general. No, I mean, much more efficient, faster. No, I mean, the HKD at the end of the day would be like a retail-focused digital currency, CBDC, equal to the electronic version of banknotes. The user will need, in theory, a mobile phone to keep and use a currency for transferring money, shopping, dining, whatever. No, I mean, and it's of course an interesting idea, same as any CBDC. But the thing is, of course, there are many things to consider. No? I mean, first of all, like whether how to protect privacy, and this applies to any other CBDC. Then what's the actual use case for that? No, I mean, I said before that it can be used to make transactions more efficient, but it needs to be also considered whether there is like a strong enough use case. I think there is, but once again, this can be debated. No, so I would say this is pretty much the status of the EHKD. And I think what makes it more interesting is to see that it comes from the HKMA in the sense that there is this past experience in dealing with CBDCs.
It's valuable to have the imprimatur of the HKMA because that shows there's serious backing for it. But as you were saying, they've got 3 projects up and running. That's led to the critique in certain corners that they're trying to do too much, and that's why their reach exceeds their grasp. Whereas Singapore, they focus on what they can achieve first, and then it's little baby steps. It's slow and steady wins the race. And that's an approach that seems to have worked well for Singapore. As opposed to grandiose ideas, but the achievement gap is quite staggering because, again, Singapore has taken the slow and steady wins the race approach, and it's worked well for them.
No, I mean, of course, it's a different approach. It's working very well for Singapore, but I would say that Hong Kong is in a different position because, I mean, want it or not, as we said before, Hong Kong is the gateway to China, which means that Hong Kong needed to work on the digital yuan because Singapore is not like attached to China. So in this sense, it's much more autonomous in the sense that whatever they design, it will be designed by them, to be used by them. But Hong Kong has this advantage and this different situation of being part of China, which means that even if they didn't want to, they had to start working on the digital yuan's tests in order to allow China to test how it would work for cross-border payments. So it's a completely different situation from that of Singapore. I mean, I'm not aware of how the HKMA is working internally on that, no. But I mean, I think that it's feasible for them to be working on these 3 projects. So far, the MCBC project, for example, has been working well. I mean, to the point that it was initially designed to be just a 2 central bank project, and it was enlarged to include 2 more central banks. So, yes, I mean, it may seem too much. I mean, of course, it's a lot, no? 3 CBDC projects for just a central bank, especially the central bank of a non-sovereign nation. No? So, I mean, for the central bank of a special administrative region to be working on 3 CBDC projects, I mean, undeniably, that's a lot. I mean, that's actually a very unique case because in most cases, there is, for example, this website called CBDC Tracker, which has been designed by some colleagues at Digital Euro Association and Boston Consulting Group, and it's actually been cited by the International Monetary Fund as well. And this website is like a world map where you can click on each country of the world and check in which is their status on when it comes to their work on CBDCs. And you will see that most countries are not even working on one CBDC. I mean, I know that more than 80% of central banks in the world are working on CBDCs. That's true, but it means that almost 20% of central banks are not working on any CBDC whatsoever. So, and even those which are working on one CBDC, it's normally just one. And in some cases, we are talking about very slow projects. So, of course, having the HKMA working on 3 projects actively may seem a lot because, well, I think it's a lot. But, I mean, as far as I know, I don't think they cannot handle it. No, I mean, it seems to be going well so far. So I think it's a different approach compared to other places. And then the final result will tell whether it was too much or not. But I think, based at least on the preliminary results, it should be fine, hopefully.
Yeah, they've got some multiple projects running concurrently, raise some eyebrows, but like you said, I mean, these are very different societies, and they've taken very different approaches to development in this space. I mean, Hong Kong is more market-led, and the fintechs complain that, the things move slowly within the giant banks. They lumber ahead, ever so slowly. Whereas in Singapore, it's more state-led. And consequently, in some ways, it's more dynamic, that the the deliverables, that which is tangible, seems more apparent. But the private sector clearly in Singapore doesn't like it, because they'd like to have more of a say in how the sector develops. But those were all the questions our audience had for you. Was there anything you wanted to add?
Well, I mean, no, not really. It's been a pleasure to participate in this podcast, and well, I think at least the audience could get like the general ideas, no, from these topics. I would say just as a final remark that I think the magic, or what makes this area so exciting, is that there is no single solution, no, to anything. I mean, any country may be like very CBDC friendly, but not so crypto friendly, and the opposite. So this future of money will actually be very fascinating. It will allow for many things to happen, and this idea of being fascinating is also, I mean, it comes at a cost, no? And this cost is the regulatory cost. I mean, it will imply for central banks, for governments to be much more, not even much more active, no? They will need to regulate faster certain things that maybe didn't exist before. We all know that the law tends to be slow. I mean, we always say that technology goes like 10 miles ahead of the law, but the law will need to make an effort to catch up as quickly as possible, because things are changing very fast, and it's going to be very important for central banks and governments to try not to be left behind, because there are actually many opportunities, and this idea, no, of the future of money being so fascinating will also involve for central banks to catch up. It means as well that central banks will, I mean, they are in many places as well, but they will need to be even more like tech oriented, in the sense that they will need to have the right people who knows as much as possible about technologies. No, it's not just about, as it used to be before, maybe like studying law, traditional law and traditional finance, and that's all. No, things are changing fast, and you cannot miss this tech angle.
Do you have any long-term projects, white papers you're working on? I mean, I know I mentioned your podcast on the upfront, but do you have any things ongoing that our viewers should know about?
Well, I just published that paper on the digital yuan in cross-border payments. It was published 3 weeks ago. Also, the digital euro white paper, that report. Right now, I'm not working on any paper right now, other than well, my podcast and other stuff. But I published these two recently.
Oriol Cadvia, thank you so much for joining us.
Thank you very much for having me.